Why is Bitcoin currently up 50% against gold since March, even though retail interest feels completely dead? Dr. Jeff Ross is back on Bitcoin for Millennials to unpack the divergence between paper financial assets and hard, sound money. We dive deep into why Bitcoin is currently in a coiled spring and how institutional rotation is shifting away from tech stocks and back into the hardest money to ever exist. And wait until you hear Jeff's crazy prediction for the next 3 years that traditional finance is completely ignoring. If you're enjoying my content, it would mean a lot to me if you could subscribe to the channel and like my video to support my journey. Thanks a lot. Now let's dive into this episode. All right, Dr. Jeff Ross, welcome back to Bitcoin for Millennials.
Thanks, Bram. Thanks for having me.
Yeah, good to have you back on. I think last time was over a year ago, and a lot of stuff has happened. So I'm excited to talk with you again. You know, last time we spoke, your models and you know your thoughts around Bitcoin suggested a really massive peak in 2025. We went to 126, back to the low 60s. At time of recording, we're at like 80, 81K, but like not the exponential vertical move yet. What do you think that you or like other models missed, or like are we too optimistic? Like what didn't you catch basically?
Sure. So what I had expected was that we would have a similar business cycle like we have had basically since the global financial crisis back in 2009. So what that means is that if you look at long-term Bitcoin charts, it tends to follow global liquidity, and it also follows the economy, so economic cycles, which have also basically run in 4-year cycles. And specifically, for whatever reason, the price closely follows the manufacturing around the world, and especially in the U.S. So U.S. manufacturing PMI, for whatever reason, is very correlated with the price of Bitcoin. I think because manufacturing, the way I think about this in my mind is manufacturing is physical labor, is proof of actual work. It's expending energy to make things. And Bitcoin is actual proof of work, energy, money. And so I think for whatever reason, there's a correlation between these two things. So that's how I think about it. So what happened in 2025? For basically from 2022 through 2025, U.S. manufacturing PMI never stopped contracting. It normally contracts for about a year, and then it starts to spike up again. So I was waiting in late 2023 and in 2024 and in 2025 for U.S. manufacturing PMI to finally stop contracting, finally get out of a recession and start to spike. It never did. And so I think in my mind, I know lots of people have their reasons or, explanations for why or why not things happened. But I think the reason why the end of 2025 was so disappointing for Bitcoin, even though it did peak as it kind of should have, from historically speaking, it did peak in the fourth quarter of 2025. It was very disappointing. We didn't have that blow off top. I think it's because manufacturing just never got out of its hole. It never stopped contracting. And so that was very disappointing. I was positioned for us to, rip higher into the fourth quarter. We never got that. So we never saw the degen leverage longs. People go in and, go all in with 10x leverage as well to help push that price exponentially at the very end. And it is what it is. So that's what happened. So I think it was a disappointing peak, but I think it's reflected in the fact that manufacturing never took off. And why do I say that now? Because that leads us to where we are today. Because maybe this is your next question, but where are we today? U.S. manufacturing PMI has the last 4 months has been expansionary. So for the first time since 4 years ago, it finally looks like this is real. It's finally out of contraction. It's out of a recession. It's starting to boom, and that is very bullish. And so when you couple that, and then there's a tricky part because liquidity is on its own cycle. Liquidity has sort of peaked, and the rate of change shows that it's kind of topping. If you look at the work that Michael Howell does on liquidity, he suggests that it's probably going to roll over and actually head lower. It's going to decelerate for the next kind of 6 to 12 months, and he's sort of bearish for that reason. I share that sentimentality that it's a little concerning to me, but it's being offset now, which is interesting, and it doesn't normally happen this way. It's being offset by manufacturing starting to spike. And I think a lot of that has to do do with fiscal dominance versus monetary dominance that we had the prior decade. Now we're in a fiscal dominance regime. So we can talk about any of that if you'd like to.
Yeah. No, it's super interesting. I recently had episodes with Plan C and also Sminston who Sminston is really deep into kind of this correlation between PMI and Bitcoin. Actually, I think today or yesterday he tweeted, we kind of escaped the below 50 PMI, and you see that once that just has a little flick above 50, you see Bitcoin go. And I find it strange that it's so directly correlated, and I just wonder what you think, right? Like, do people think like, oh, cheap money, let's go into risk, or like how does that even work? That there is such a correlation in a very short time frame, I would say.
Yeah, so that correlation, I think, is real, and it continues to show itself to be real for whatever reason. The other thing that I think is important, besides just the whole liquidity expansion concept, is the financial repression concept. So somebody, I think it was Jordy Visser where I first saw it, and maybe Darius Dale have been talking about this, and some other people, and I want to give credit to whoever came up with this. When inflation is above what the federal funds rate is doing, and the reason I bring up these short-term T-bills is because they tend to follow what the federal funds rate are as well. When inflation is rising above the short-term interest rates, you're getting financial repression right there. So basically what's happening is the central bank, the Federal Reserve, is holding short-term rates below a certain level or at a certain level, but inflation is rising. Everybody knows inflation is spiking right now because of the Persian Gulf conflict and spiking oil prices, all that kind of things, and deglobalization. All of these things tend to be very inflationary. When that happens, somebody showed a chart, and I believe I first saw it with Jordy Visser, that in 100% of Bitcoin's gains over the last 10 plus years have been during these periods where inflation is running hot and interest rates are below that. So you're getting financial repression. So holders of short-term debt like money market funds, T-bills, and similar instruments are actually losing purchasing power relative to the inflation rate. So they're losing their purchasing power even though they're getting those gains. And Bitcoin sniffs that out. So Bitcoin loves monetary financial repression. And when that happens, basically people are like, why would I have my money sitting in a money market fund actually losing purchasing power when I could put it in the soundest, hardest money and make gains like that. So over the time, you can look at charts that show that this is when Bitcoin starts to perform. And we just recently had a cross where we're getting this kind of short-term financial repression, and right on cue, Bitcoin also started to take off. So I don't know if that's also correlated with manufacturing doing well, if they're sort of all interrelated. But whatever it is, for whatever reason, Bitcoin is sniffing all this out and is starting to look quite bullish.
Yeah. You recently said that you think the 4-year cycle is dead. I don't know if you think it ever existed, but if that's the case, what is then kind of the new heartbeat of the price? Like what is the thing we should follow? The combination of the things we're just mentioning, or are you looking at like one specific?
So in the 2010s, the last decade, I think Bitcoin was basically a collectible. It was in the collectible phase where it was just sort of this interesting magic internet money that cypherpunks and other people got into. So I think it traded very tightly with its own 4 years, or almost. It's not quite a 4-year cycle, but 3 year 11-month cycles is usually what kind of Bitcoin had been following. I think it had a lot to do with the Bitcoin miners and sort of their whole financial situation, and as the halvenings would happen, the effects that had on miners, whether they were buying or selling or expanding or contracting or not. Now, I think this decade where Bitcoin, and this is the store of value decade for Bitcoin, where as it's becoming the world's money, it does it in phases. So the 2010s was the collectible phase. The 2020s is the store of value phase. I think the 2030s will be the medium of exchange phase for it, and then the 2040s probably will be where it's kind of the world's unit of account. So it has, we're growing, we're getting there. A lot of people want it to happen right now, but I think we're still, like, say, 15, 20 years away from that, where it's the world's unit of account. Why does that matter? Because Bitcoin is now increasingly trading as a major global macro asset. So it like oil, like U.S. equities, like gold, and other like bonds, things like that. It trades on the ebbs and flows now of kind of global macro movements. So what are the central banks doing? Are we having a fiscal stimulus or contraction? Are we having a monetary stimulus or contraction? Those kind of things, those drive major asset prices. They drive the dollar, they drive the yen. Are central banks protecting their currency, or are they letting it, drop? Those kind of things. So Bitcoin is officially on that world stage, and I think it took it to become sort of in the 2 trillion range for its kind of market cap. Right now, it's about 1.5 trillion ish. As it gets to 2 trillion and higher, it will increasingly just trade like another major global asset class. So that's how I view it, and I think that it's going to continue doing that for decades to come, even more so as the years move on.
If your Bitcoin doubled tomorrow, would you feel good about how it's secured right now? Most people haven't really pressure tested that, and I get it. Some people are comfortable taking full control of their own keys, but others want security without having to manage it all themselves. That's why I partnered with OnRamp, multi-institution custody where your keys are held across independent institutions in multiple jurisdictions. No single company can access, move, or lose your Bitcoin. Lloyd's of London insured, inheritance planning built in, and a team that walks you through the entire setup. They serve clients globally, whether you're in the US, Europe, or anywhere else. Book a free consultation at onrampbitcoin.com/Bram to learn more. That's onrampbitcoin.com/Bram. Most people stop too early with Bitcoin. They buy it, maybe move it to a wallet and think they are done. But they're not. The real questions are how you're securing it, how private your setup is, and whether you're verifying your own transactions or trusting someone else. And what happens to your Bitcoin when something happens to you? This is the layer that most people ignore, and it's the most important one. That's why I've been working with the Bitcoin Way. They help you set up self-custody properly, including privacy, cybersecurity, inheritance, and even running your own node. And they do it without ever touching your Bitcoin. They're not a custodian. They're your support team. If you're serious about this like I am, go to thebitcoinway.com/Bram, that's BRAM, to book a free call. They'll walk you through your setup, personalize everything to you, and help you get a much stronger position very quickly, whether you're a beginner or more advanced. That's thebitcoinway.com/Bram. So when Bitcoin was going down and little crab sideways, feeling stuck, we had gold hitting all-time highs, like really ripping, silver too, and this kind of took a few months. Do you think gold is a leading indicator for bigger turmoil, dollar currency collapse? Some people think that is very far away. That is too big of a thing to say, right? But it's an indicator for something. Let's call it like that. Do you think just gold is the leading thing because just most people are, just have that picture of gold, while we probably know that Bitcoin is fundamentally superior to gold, right? Is that just the case right now? And is Bitcoin, kind of like this coiled spring, or is it lagging? Like, how do you look at that?
Yeah, so this is a bit counterintuitive to me, just because gold is old and gold is analog, but gold tends to lead Bitcoin price movement by about 6 months. So that's pretty interesting. It tends to be gold is at the front edge of what's happening financially and monetarily. And then about 3 months behind that is global liquidity. And then about 3 months behind global liquidity is Bitcoin. And so that's all very interesting to me. So it did break down a bit, though, for the last kind of half year. So if that trend is to continue as it historically has, Bitcoin would have a lot of making up to do, basically. So while gold has been weakening, we still need to see a serious ramp higher in Bitcoin to kind of make up for lost time. So yes, I think over the long run, though, that both gold and Bitcoin are doing the same thing, right? They're both sound money. Bitcoin is the soundest money. They're both hard assets. They both respond to financial repression. They both are basically what people should be getting out of. If people are sitting in government bonds right now, they're going to be inflated away. Their value is going to be inflated away. They're going to lose purchasing power. So as more and more people and institutions figure this out, they're going to be continually shifting over into commodities, hard assets, gold, and Bitcoin as well. So I expect all of those to continue doing well for the next at least 5 years or so.
Isn't it crazy that people haven't figured out that, bonds are just like a Ponzi basically, and you always lose your purchasing power like more than what the yield gives you. It's just, it's just a side note, but it's so crazy. Yeah. I find it so crazy.
Well, I think it's hard because, the boomers and the silent generation before them, they did nothing but make money in bonds from the early 80s all the way till like the early 2020s. So for 40 straight years, bonds were a really smart investment. And so most people don't think about it. They're like, yeah, that's just what you do. You have a 60-40 portfolio and bonds offset stocks. And that's just no longer true. But it takes a long time for people to figure that out. Thankfully.
Well, that's why it's so brilliant also, right? Don't you think? Like,
exactly.
It's a brilliant scheme, right? I also, I really like what you said. I also feel that, the Bitcoin holders are, that holding is more structural. I feel that it's less, I want to say like reactionary and more long-term thinking. Whereas I think what we just saw with gold, like gold did nothing for I don't know how long, and then it goes up. It feels like this kind of like wake up moment for a certain amount of, capital allocators and also individuals, right? Just consumers that then are like, oh, okay, something is going on. I need to get into gold because gold is this old idea of, the exit and like the parallel hedge or however, people define it. And, I've always felt that this lag is just so interesting, right? That I think, Bitcoiners can all kind of articulate why Bitcoin is better, but it's just this kind of like story narrative around gold, just the history around gold that, makes it just a primary choice for people to get into when they have that feeling of, now is the time that I need to get out of whatever it is, stocks or bonds.
Right. What's interesting too, I don't know if I showed this, it was a long time ago where I was on your show. But there are these sort of 10 to 20 year cycles where financial assets do very well relative to hard assets and relative to gold specifically. So what I like to show, and I see more people now showing the same chart, basically the 100+ year chart of the S&P 500 priced in gold. And what you see are these very large and obvious peaks and cycles. So like basically in 1929, right before the Great Depression, there was this huge peak where financialized assets did extremely well, and then they cracked and they broke, and all the way until there was a bottom in 1933 and then a second bottom, so like a double bottom in 1941, and it took World War II to kind of get manufacturing going again. And then you see this financialization happen again from the early 40s all the way to like 1968 or so, and then it rolled over again. And then the 70s were a very difficult decade for financial assets, people who just owned stocks and held for 14 years from 1968 to 1982. Basically flatlined. It just chopped sideways like a crab market. But in real terms, in their purchasing power, they actually lost about 75% of their purchasing power over that time. This happened again from the early 80s all the way till basically the dot-com bust in 2000. And then again, we had a time where it rolled over. Stocks basically went nowhere for a very long time, and gold did very well from 2000 to 2011. We had one more run higher, and that same thing happened again where we had a peak basically at the end of 2021. And the way I view that is basically the world for like 15 to 20 years or so is like they're all in on the U.S. The U.S. can do no wrong. Everybody wants to own U.S. tech stocks and be a part of this. And the system just builds and builds and builds on itself, and more leverage comes into it, and more people are borrowing, and all of that is going into U.S. based assets, and it becomes more and more financialized. And then finally, people are like, you know what? It's gone too far. This is crazy. Like the U.S. is so over indebted right now. There's no chance they can pay back their debts and sound money. Let's actually go to hard assets and sound money, and so that's when then gold starts to outperform commodities, things like real estate, farmland, and I think Bitcoin tend to outperform substantially over financial assets during those times. So we're in one of those periods right now.
You talked also about something that I hadn't heard of, but you highlighted the return of something that is called 100% bonus depreciation, which is something in the US. And you talk about it that it could be a catalyst. Now, how does a corporate tax break lead to more demand for Bitcoin?
Well, so that's the tough. So it's good for manufacturing in general. So corporations right now are being strongly incentivized and are actually doing this where they are expanding their manufacturing capabilities in the US because they have huge tax breaks for doing so. They can depreciate their expenses basically in year one. So they are heavily incentivized to move very fast right now to bring manufacturing and energy capacity, energy infrastructure manufacturing, and the military industrial complex basically back to the United States as fast as possible. Because the Trump administration believes we are at war right now. I think in their minds, we are in war. And so everything they're doing and the executive orders that the Trump administration is putting out is basically wartime mentality, even though the majority of Americans still don't think that we're in any kind of major war right now. They think Trump's just kind of crazy. And so you asked, how does that go into people buying Bitcoin? I don't know the correlation, but there is a tight correlation, like we discussed right at the beginning, of when manufacturing does well, for whatever reason, that correlates with Bitcoin doing well. And again, the way I see that is proof of work begets more proof of work. So proof of work manufacturing and the building, the expending time and energy to build actual goods that people want, valuable goods and services, gets reflected into the price of Bitcoin, which is proof of work money that people want to have a durable, energy-based money with a fixed supply. And for whatever reason, those two things are heavily correlated. So I don't know why, but that's how I figure it out in my mind.
Yeah, so we're seeing Bitcoin now up, I think it's about 50% against gold since March, which is related to what we just talked about. I find that very interesting, because you could argue that the underlying thesis is the same, right? So they should be going up together. But the interest of retail in Bitcoin, I feel, is totally gone. Like, it's not 2017 or 2020 at all. I did get a notification this morning, like from Spotify, or like this podcast tool that I use, where it showed Bitcoin searches are up, for example, and you see in Google, you see Bitcoin searches up, but I don't think it's reflecting in the price. I also feel there's this unit bias, right? Like, people just think 80K is a crazy price. Why do you think the more like owner class, more affluent, richer people are actually stacking, and the average person just still thinks, they missed it, or it's still a Ponzi, or, this could never work, or just their trust in fiat is still high? Like, how do we reach more people? Just, I would say, basically with the general thesis, right? Loss of purchasing power, inevitable inflation, etc.
Well, to me, just from observing from the outside, so I'm not a political person, right? I'm a fierce independent. I'm not Republican. I'm not Democrat. In the U.S., so the left is anti-Bitcoin and the right is pro-Bitcoin. And I think that's a huge bummer. And I think what the left has done is they associate Bitcoin and all things crypto and crypto scams rightly with the Trump administration, because they're all involved in crypto too. These guys they say they're pro-Bitcoin, but they're really crypto bros disguised as Bitcoiners. Kind of like the Bitcoin conference. The big conference says it's a Bitcoin conference, but it's really more of a crypto bro and stablecoin conference, which I think is unfortunate. So it's confused in the media, and in the U.S., this is just proven, this is factual, the majority of mainstream media is left-leaning. And so left-leaning media, which most regular people see, to your point, like, why don't regular people embrace Bitcoin? What don't they understand? They're being told still the same kind of tired arguments that we've been talking about for the last 5 or 10 years. It's a Ponzi scheme. It's a casino. It's going to zero. There's no intrinsic value. All of these, it's boiling the ocean, blah, 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 blah. All of this same nonsense. It's just being spewed day after day by the left-leaning mainstream media. And then also, I think what's super interesting is the majority of investment advisors and fund managers in the United States also lean left, also donate politically to the left. And again, this isn't even it's just very interesting to me. And so to me, they either then avoid Bitcoin because they think it's a Trumpian coin and it's a scam and it's going to zero, or if they do own Bitcoin, they still don't understand it and they treat it like it's a software stock, basically. So we've seen lots of charts showing the correlation with software stocks and Bitcoin over the last 6+ months. And to me, that's because Wall Street is now involved and they think of it like this tech bet, basically. And is AI going to replace Bitcoin? And what if quantum computing breaks Bitcoin, and all these kind of things that they're concerned about, but because they don't truly understand what's going on with Bitcoin at kind of a protocol level. There's just a lot of education that needs to be done. And unfortunately, in America, it's become a political issue. And at any time anything becomes politicized, people basically stop thinking. They basically they repeat what their leaders say. They repeat what the mainstream media or social media says. And so it's either good or bad. And so right now, everybody on the left thinks it's bad and everybody on the right thinks it's good. And almost nobody really thinks about what it is that they own. And they don't understand that it's just sound money. It's a better asset. It's a better savings vehicle. So that's how I look at it. And so that gives people like you, Bitcoin podcasters, a ton of job security, because there is so much education that needs to happen both in the United States and around the world to help people understand what Bitcoin actually is. It's this new asset class that most people haven't taken the time to figure out.
Bitcoin is neutral money. I do think it's neutral money, right? Like it's money for enemies. Anyone can adopt it. Anyone can do with block space whatever they want, even if they want to do like idiot cat pictures or whatever. But the underlying idea, I think, under neutral money is actually somewhat political, right? Like a libertarian, perhaps a bit conservative type idea. So that's something that I later learned, or just people pointed out to me, is that a lot of people on the left who actually call themselves progressives, which I think is funny, like it's a hijacked word because they're totally not progressive, right? But they do want more centralized control, right? Like that. I do think that is central to their ideology. So in that sense, I would say that Bitcoin is kind of a threat to that. What do you think about that? As someone who positions themselves, in the middle.
Yeah, well, it's definitely so I agree with you. So and we see proof of that, right? Like, so China, which is all about central control, communism, they ban Bitcoin. They don't like Bitcoin. They don't like it because they can't control it. Bitcoin is sort of this freedom money outside of their control. And so a nation like China or say North Korea would not like such a thing, even though I think it would be great for their citizens. And so I agree with you. I think, and most of the people who are there are people who are vehemently opposed to Bitcoin in the U.S. A lot of Gen Xers talk about this. Very intelligent people who I would just say they tend to lean left and are quite statist. Like they just think that the creation and control of money should lie only with the U.S. government. And then they talk about all of the reasons why Bitcoin could be bad and how
which is not progressive. Sorry, I just want to say.
Yeah. And right. And I don't want to get political about this. I just just make these observations. And to their point, a fixed supply money is antithetical to government fiat currencies. So the whole fiat system is based on the expansion of credit, and it has to constantly expand. And so they have to the Congress and other, Western governments and whoever has these fiat currencies have to constantly borrow and spend money to expand the monetary supply to continue to roll over these ever increasing debts. And that continues and it continues and continues until it can't continue anymore. And so that's what brings us to these points of geopolitical tensions and major world wars and conflicts, civil wars. Civil wars are happening all over the world right now. Countries are battling each other. There's more global conflict right now than there has been since World War II. We haven't seen this much hot war fighting since World War II. So it's not a good time, and it's all interrelated. And basically, as the governments reach this point where they have expanded the debt supply so much that it's beyond it's not even possible to repay the amount of debt that we owe right now in sound money. And when you have that, you see massive rises in income inequality. So where it starts, like right after World War II, there was income equality. And now that gap has widened and it's become so extreme that the people just can't take it anymore. So the working class on the bottom that's just trying to like literally just survive by working their jobs and working as hard as they can, usually with 2 or sometimes 3 careers and side gigs and all these other things, they still can barely survive right now because inflation has been running hot. And all of this borrowing and spending by the governments have basically created this huge gap. And that's where you have these basically fourth turnings, these events where the global humanity can't take it anymore and governments are getting desperate. And so we start to go to war, internally and externally as well. And so nobody understands that, though. Like, you try to talk to any regular person on the street, they have no idea what's happening. All they know is that the groceries are expensive and that gas is expensive right now. And dang, Trump, this war has made gas expensive. And, and dang, whatever political party, like they just kind of want to blame somebody. But it's a system-wide problem. It's not individual people that are doing this. And we've been on this trend for the last basically 80 years or so, and so we're reaching this point of inflection where something massive has to happen to reset these systems. And I see on the other side of this that the obvious solution is Bitcoin. And you obviously have to get to a sound money standard again, where people can do work and then they have a money. It used to be gold; it could still be gold to some degree, but also Bitcoin, which preserves and Bitcoin actually appreciates your purchasing power over time, versus gold, which basically just maintains your purchasing power over time.
For my European friends that want to buy Bitcoin with ease, check out Relay. I've been a long-time fan and happy to partner up with what I think is the best Bitcoin-only platform for Europeans. They offer a super simple, beginner-friendly app with no distractions and no shitcoins. You can do a quick one-time smash buy or set up automatic purchases when you're stacking regularly. And here's the thing that matters most. Relay is 100% self-custody. Every set you hold is yours. Your keys, your coins. If you want to get started, download the app via my link below or in the description and use code BRAM, that's BRAM, at checkout to get 10% off your fees. Every Bitcoiner hits this moment. You need cash. Maybe a house deposit, an emergency, or a tax bill, and you're staring at your stack thinking, do I really want to sell this? Here's the thing, you don't have to. You can borrow against your Bitcoin instead, so there's also no taxable event and your stack can keep on stacking. This is where Firefish comes in, a peer-to-peer marketplace for Bitcoin-backed loans. And Firefish isn't a lender. They built the protocol that makes this all possible, which is exactly why they never, ever have to touch your Bitcoin. During your loan, your Bitcoin sits in an on-chain multisig secured by open source code. You can easily create a loan request with your desired amount, duration, and interest rate and share it on their marketplace at firefish.io. When you get matched and decide to accept a loan offer, you can use code BRAM to get 30% off your first loan's fees. That's firefish.io and code BRAM. You've spent a very long time kind of training yourself for this, pattern recognition. So when you look at all of this stuff that we're talking about, what do you think that you are seeing that others are missing? Like what underpins your current thesis that you think not a lot of people see?
Let's see. So it goes back to some of the things we've talked about already. Is I think that most of the world has already started to figure out that financialized assets have kind of had their heyday and they've peaked already and they're rolling over. And so people want sound money and they want hard assets, and they don't believe that the Western world governments are going to be able to repay their debts in anything sound. And so they're starting to get out of that. So that drives a lot of what I do as a fund manager. So whereas like in 2020, 2021, I was maybe focused like on these, tech companies and all things financial, like anything that basically did well because of monetary stimulus, quantitative easing, those types of things. Now what I've done is pivoted to this sort of hard asset focus. So looking at different commodities, China figured this out all the way back in like 2014. They started making changes. So instead of, they had all these surpluses and they had been just buying US treasuries as their primary way to store their surpluses. In 2014, they thought, you know what, we're going to stop doing that. And we're going to, because we don't think this is going to last too much longer what the U.S. is doing, so we're going to front run it. So they started buying hard assets. They started stockpiling commodities all throughout China. They obviously have a super robust energy infrastructure, manufacturing infrastructure as well. They made investments all across the world. They tried to do it in the U.S., but we've kind of pushed them back. But, all throughout Central, South America, Africa, Asia as well, they've made a lot of investments and kind of formed their own alliances. And so as more of the world has figured that out, what happens is the flows of liquidity start to move in these different directions. So whereas before it was just all moving into basically the mega cap tech stocks, right? The Meg 7 stocks is all, including global central banks, were putting a lot of their assets into these equities. Now it's all switching over. So it's going into gold again. We're watching gold like skyrocket, going parabolic for foreign reserves, while U.S. treasuries are declining parabolically as well. So it's falling off. Gold is rising. And I think that trend has only just begun, and that's going to continue to expand. I think as more and more people figure this out, they're going to continue to realize that these traditional financial assets they've been holding, like treasuries, like any kind of debt for the most part, like most equities, they just can't hold water anymore against this debasement that's coming. So as we see more financial repression occurring, we're going to continue to see that shift. And I think one thing what's super interesting as an institutional investor is watching how institutional investors rotate out of different assets. So it's like they go all in on something, and then when they feel like they've milked that asset enough, they sort of just switch over and they say move their gains over. So it was gold, and then it was gold miners and silver miners and those kind of things, and everybody was just going crazy for it. And then it just shifted, and it kind of took the lifeblood away from that, and it shifted out of that, and then it's been shifting into all things AI related. So we're going to continue to see that, I think, happen for the next 5 to 10 years or so. AI, energy, infrastructure, military industrial complex investments, they're going to ebb and flow, but continue to go up and to the right because they're being supported by their governments. But right now, I think we're seeing a real rotation back into Bitcoin right now. So getting back to your question from a while back, gold front runs it for whatever reason, but now it looks like the shift is happening back where Bitcoin had been just sort of in the doldrums, but now it looks like it's formed a real bottom, and it's really starting to strengthen. So hopefully that continues. At least as of today, we're sitting at 81,000, and it's starting to retake a lot of it. It's regaining short and medium term momentum. It's just about to retake its 200-day moving average, which is right now sitting at about 83,400. So that will be another big sign. So for a lot of longer term traders, they look at that 200-day moving average, and if we can regain that, that means it's officially long term bullish momentum. So they'll start scaling in as well. So we'll see if it holds. I'm just making observations, not making predictions. But for now, it looks like this is actually a real rotation that's taking hold.
Mm-hmm. I also saw now the majority of short-term holders is in profit, which is always also a really good sign. Like that was the first time in quite some time. And yeah, to add to what you said, I also think it's interesting. You see, Citi Bank and JP Morgan, etc., like moving into Bitcoin. I like what you said about milking a certain cow, right? I mean, eventually they're all capital allocators that have the main job is preserve the capital, right? And the second is grow the capital. And I always thought, if a random pleb like me figured out that, there's an end to stocks, there's an end to treasuries, I can imagine that, the people that do this every day should figure this out too, right? But there's probably, there's more things for them to arrange before they can actually move into something like Bitcoin, right? Like the proxies as in the ETFs rather than, just spot Bitcoin. Do you think that will change? Actually, like that these kinds of entities, they will have like ETFs, but eventually also hold, just spot Bitcoin?
I would like to see that, but I'm not overly confident that will happen. I think the way that governments work is they want to have their tentacles in everything. They want to have some control over it. So I think that government regulators and tax authorities will continue to encourage or coerce people to get into things like ETFs, Bitcoin proxies themselves, to have them centralized on brokerage platforms so they can have sort of access and oversight to them. And I think that most of it seems to be lip service, where they're okay with people holding it privately, holding their own private keys and things, because it's outside of the system. So they don't like things outside of the system. So far, we've tolerated it here in the U.S., and depending on who's in charge, it's more or less tolerated. But I mean, the last administration was extremely opposed to anything like that, any private ownership, and tried to shut everything down, mixers, and and didn't like any of it. So this current administration is more in favor of it, but who knows what the next administration and who knows what the next election cycle will bring about. So yeah. I think in general, governments want to have control over everything as much as possible, and it's up to the people to resist and to find sort of a happy medium of what you can do. So I encourage all Bitcoiners to continue to hold your own Bitcoin, hold your own keys, run a node, do all those sorts of things, as long as you're able to and willing to do that.
Yeah, well, this is a nice bridge to a question I got from X. There was someone who asked, what are the biggest risks to Bitcoin specifically within the US? Like, do you see a modern, 6102 gold seizure order as something that is, could be an actual threat? You kind of just mentioned, they want you to buy decentralized forms of Bitcoin. Or do you think, the Bitcoin ETF kind of made Bitcoin too big to fail? This is something you shouldn't touch. What are your thoughts?
So regarding I don't think a 6102 is likely. And I think the reason is because back in the 30s, the US dollar was actually on a gold standard still. And so the reason they did what they did was basically because they wanted to devalue or debase the dollar massively in order to spur the economy. So they did what they did because the dollar was specifically linked to gold. Because Bitcoin is not currently, or gold are not currently tied to the dollar, or the dollar is not tied to them, I think something like that is very unlikely. But to answer that question, I think what's more likely is just what we sort of touched on, is I think the government will want to consolidate Bitcoin in ETFs, in brokerage houses, in banks. They're going to make it easier and easier for banks to custody Bitcoin, and people are going to start doing that and be enticed to do that. And then I think the real risk is coming. So in a fourth turning, which again, I'm a big adherent of that, I think we're heading towards major war, and I think we're headed towards even more massive government borrowing and spending and financial repression that is going to necessarily come from that. And I think we're going to see more and more pushes to tax everything. And so we're already seeing that in some states around the US where there are these billionaire wealth taxes. It always starts like that. It always starts with this select group of tiny people, and people are like, yeah, tax the rich, tax the billionaires. But then it starts to expand across basically the entire population. So back in the 40s, around World War II and just after World War II, the income tax rate in the US went above 90% for the highest earners. And I think that it's likely that we start to trend in that direction again. And so you can't tax Bitcoin that's sitting in cold storage, right? So you can only tax it if it's sort of on a system, in a brokerage house, in an ETF, those kind of things. And once it's there, then the government can put their tentacles on it and extract taxes through coercion or whatever they do. So I think that's going to be the biggest risk to Bitcoin. Is Bitcoiners may make a lot of profits over time, but it may be at risk to a government at war, especially if there's some sort of global war where they're going to be like, look, if you're a patriot, you will give us 90% of your gains that you've made over the last 10 years. And if you're not, we're going to throw you in jail and penalize you. So it's your choice. I think that's a decision. To me, that's the biggest risk probably in the next 5 years or so.
So with all that we talked about, right, and I would say adding in a new Fed governor, Kevin Warsh, who described Bitcoin as, new gold, I think, for younger generations. He's coming in. There's these growing debt payment obligations this year. The Clarity Act looks like it's going to pass. Of course, Iran war, yen carry trade unwinding, It is just so logical to buy Bitcoin, but we're still at 81K.
Yep.
What would be an actual inflection point, like what you just said, or is that too late? What do you think? There's so many signals right now, and it's just again, I just find it fascinating that people are still asleep. But
sure,
what would you say could be an inflection point for?
Well, based on historical precedent, we've already seen some inflection points, and we've talked about them. So manufacturing starting to take off again tends to be strongly correlative to the price of Bitcoin. when you see actual financial repression, so when inflation is running hotter than the prevailing interest rates, Bitcoin sniffs that out and tends to do very well. And it looks like we just passed that inflection point. So I was still waffling, kind of, leaning bearish based on things. But when I see manufacturing continuing to expand, and when I see financial repression actually starting to happen in real time, and including on the short end of the yield curve, to me, those are real inflection points. And so I think that we're going to start seeing that. And what brings like normal people in who don't think about Bitcoin or who don't care, they just care about price action. Once we start saying, "Oh my gosh, Bitcoin, it got back to 100K. Oh my gosh, it's a new all-time high." Those kind of things. That's what gets the normies who don't think. That'll get them interested again in Bitcoin. And they've been, they sold it all and don't care, and they thought, well, maybe it is going to zero. I'm just going to sell it all. They'll all come back in when it's back above like 120 or 130 or so. Mm-hmm. And so it's just how these cycles always work.
Yeah, I've talked to many people whose story is similar to this, right? Like I bought at price X, then, it went down. I got scared. I sold. It went further down. I felt really great. And then, years later, I looked at Bitcoin again and it was higher than, when I bought it, and I realized it still didn't die. It's not a Ponzi and whatever. And then I actually, started to study what this is, because I just kind of wanted to redeem myself for missing something. Right. And, I agree. This probably happens at every price level. Like this is going to happen at 500, 600, 700K back to 300, people will be like, okay, now it's really over. And then, 3 years later, it's at 1 million and they wake up again. So, again, I use the word fascinating and entertaining a lot. I just think it's just so fun to follow this and just see the repetitive pattern. But, with every one of these, kind of like cycles or moments, it's kind of like this little step change, right? Like there's always a bigger group of people that stick around, and so on and so on and so on. The underlying thesis is just getting stronger and validated basically every day, I would say, at least every month, if you just talk about the monetary debasement. So slowly but surely we're just going to see it. Do you think, we talked about this, right? So Bitcoin is kind of lagging this thesis for, let's say, a big enough group of people, right? The debasement of the dollar and other currencies. Do you think, 80K is still a gift? Do you think eventually we could, go back to 58K gang? That would even be a bigger gift in my opinion. But sure. Is 80K extremely undervalued, fair? What do you think? So
I'm also an adherent in the power law concept of Bitcoin, and I think it does follow that. So I believe that model is accurate until it's not. So at some point it may break down, but for the last 16 years it has been accurate. Mm-hmm. And so until it breaks down, I think that's a good model to go by. And that's what I get a lot of grief for, like these calls that I make when so Bitcoin, I think, moves according to this power law, but it's going up and down in this band over time.
Yes. Yeah.
And so when people ask me, what do you think the price could hit in this given year? And so in my mind, I think, okay, so if we have liquidity doing really well and global manufacturing doing really well and animal spirits taking off, so everybody is using leverage, then Bitcoin's going to get to the top end of this channel. And so that's what people, so that whole, like, everybody use it as this headline for me back in 2024 and 2025. It could hit 475,000. And that's all that is the top of this channel. So you can go online.
Like the top 1%, the 1 percentile.
So right? If everything is working right, if the economy is just ripping, if liquidity is flowing, if leverage is going bananas and markets, risk assets are just going bananas, Bitcoin will be at the top end of that. And that will always be true. And so.
And the point is, sorry to interrupt, that it happened before, right? Yeah. So if you look at the power law and you have the channel, right, it hits the top of the channel, maybe for a day or an hour, right? But then,
and then it falls down just as fast so it rises up and then it falls down just as fast, and it's terrible. That's the backside of the hockey stick. And so likewise, if liquidity is not flowing and it's contracting, if the economy is in a contraction or a recession or a depression, or and global manufacturing is contracting and there's no leverage, because not only are people not using leverage, they're getting margin called and getting wiped out. which we've experienced a little bit this year, and we experienced greatly in 2022. We also did back in 2018. We also did back in 2014. So in 2026, we've also had this basically bear market where factors were kind of working against it. The manufacturing was still kind of we didn't know if it was going to remain in contraction and all those kind of factors. So it's going to be at the bottom end of that channel. So when people ask me, like, could it go lower? I don't think it's going to go lower because this has been pretty accurate throughout this whole time. And why doesn't it go so right now the lower bound of this channel, and by the way, props to Giovanni, who came up with this who has popularized the whole concept, and he has this chart that anybody can go look at online, which I still think is a fantastic model. Right now, the lower bound of this boundary is basically 55,000. And so at the beginning of this year, I said, I think Bitcoin is unlikely in 2026 to go below and stay below 50,000 throughout the entire year. And I think it's unlikely to go above and stay above 700,000. That's basically the top end of this band at the end of 2026. That's all I'm doing when I'm saying these sorts of things. So if the economy is booming, it could get this high. And if the economy is terrible and everything's going wrong and we're at war and blah, 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 it'll be at the lower end. And so to your question now, going back, is 80,000 a good price to buy? We're very close still to the bottom of this channel. I think at the end of this year, the price of Bitcoin is unlikely to be below 70,000 based again on the power law in these channels. I will be very surprised if it goes below. It's not to say that it can't. It's to say that I would be surprised if it is. So 80,000, yes. If you only have about a 10 to 15% downside from here over the very long term, that's a pretty good risk reward. If it's a downside of about that, but in the next 1 to 2 or 3 years, we could go up to, say, 700,000 or 900,000 at the end of 2027 or above 1 million in 2028. That's a very good risk reward if you're willing to just sit and hold it. And what I like to tell people, because this is the caveat I like to say, I look at these things because I'm a fund manager, so I'm trying to chop off the left tail risk. Basically, if I don't want to see 80% drawdowns in my hedge fund because, Bitcoin is crashing like that. So we basically cut it off with trailing stops. Most people, I believe, and 99% of the world should just simply view Bitcoin as your savings account. So it's the way you save your purchasing power. So I don't think people should trade Bitcoin. I think, and this is what I personally do individually, if I get paid, I put it into Bitcoin. I save in Bitcoin. And I don't care that it's volatile. In fact, volatility is a good thing when you're just dollar cost averaging, because if it spikes lower, you're buying it when it's spiking lower. So you're getting more sats for your dollar, or whatever currency you're using. So I'd recommend to all people, just dollar cost average into it, just saving it, and have a long-term perspective. Like, think at least in 5 years, but ideally 10 or 20-year time increments where you're just saving your purchasing power for the next decade or multiple decades.
Yeah. So there's still this talk, I just mentioned Clarity Act, but there's also still this talk of a U.S. strategic Bitcoin reserve. I've always thought that the kind of like how do you say it? Like the global game theory between sovereigns, like the line between that actually kickstarting in my mind is like extremely thin. And I said this recently, right? Like, El Salvador buying, okay, that I think it's amazing what's happening there, but that was not a serious country, right? Like that was literally at almost the bottom of the bottom. I think that if a somewhat serious country, let's say Czechoslovakia or Poland or whatever, starts buying Bitcoin, that it's already on, because why would you let a smaller, lesser country to whatever point of view outcompete you with Bitcoin? Now there's still this U.S. strategic Bitcoin reserve talk. If that actually happens, do you think that will actually happen? Maybe that's the first question. But like, what happens after that? If and do you agree with this line being kind of thin?
Yeah, as a global game theory. So first of all, we do have a strategic Bitcoin reserve, but it's with confiscated Bitcoin. So I don't like the way we've accumulated the Bitcoin we have. Yeah. We've taken it from
and unverified, right? Like exactly. We don't know how much it actually is.
Right. Yeah. I do think I've seen people saying, you can see the amounts we have. I don't know. So I'm an outsider. I'm just looking in. I have no idea if the government truly does have that or not. I think they probably do, but I think all of the Bitcoin that the government has, it's taken from people, and because they said these people are criminals, so they've taken their Bitcoin. I don't like that, right? I want you to work for your Bitcoin or earn it. So that's one. Two, I'll believe that we're going to start buying Bitcoin as a country only when I see it. I hear, Cynthia Lummis has been talking for a couple of years now about how they're, going to put this bill through Congress and they're blah, 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 and everybody gets all excited and then it goes nowhere. So, and I know there's a lot of animosity towards it, and a lot of especially people on the left, the Elizabeth Warren people and her types, they fight this tooth and nail. They hate the idea of a Bitcoin strategic reserve because it gives validity to Bitcoin as an alternative to the U.S. dollar system. So I understand their point of view. I just think they're wrong, and they're trying to fight a technology whose time has come. So they're going to lose eventually. I think embrace it while you can. So step 3. As countries start to do this, yes, game theory suggests that they will be in the pole position. So El Salvador is making great strides, and other countries that are starting to do this, I think, are very wise to do so. I think if the U.S. started buying Bitcoin strategically, like Congress mandates that we are going to buy X number of Bitcoin, that would be massively bullish. And I think that would it would ignite this sort of race and this game theory. And I think, by the way, that we should do that because step 4 is, we allegedly have a lot of gold reserves still here in the U.S., although we still haven't seen proof of it for the most part. These other nations, the BRIC nations, right? So China, Russia, and their colleagues, they're all saving in gold. They're all basically using gold as their strategic reserve. I think the way to counter that would be we're going to use, and that would be a great way to revive the American spirit in the American psyche and the Western world psyche to say, we are embracing freedom money. We want what's best for our citizens. We do not, we're anti-communism. We're anti-central control. So therefore we embrace Bitcoin and we encourage our citizens to, just like China encourages their citizens to buy real estate and buy gold. And India does that for gold as well. I think America should, and then the rest of the Western world should encourage their citizens to actually buy Bitcoin and promote Bitcoin. And I think that would be a way we could basically surge ahead or regain the lead. And if we've lost a lot of ground over the last couple of decades, that would help put us back on a glide path towards success for the next several decades. But I'm not holding my breath. Like I said, I don't think we have true Bitcoiners in the White House. I think they're crypto bros who are disguised as Bitcoiners, pretending to be Bitcoiners. And so I'll believe it when I see it, but as of now, I still don't believe it because I haven't seen it.
Yeah. All right. My last question: what is a view you hold, about the next, let's say, 3 to 5, 10 years that you think others think is absolutely insane, but for you is perfectly clear?
Oh man, I could do a lot of things there. Well, I think one thing we've touched on is I actually think World War III has already started. I believe we're in a fourth turning already, and similar to the 1930s, and most Americans don't get this because a lot of Americans don't understand history, and I'm not making fun of them. It's just like, that's just how we are. Most Americans think World War II started in 1941 once Pearl Harbor was bombed, but actually World War II started in the mid-1930s. Japan was invading China. Italy was invading, I think, northern Africa. Germany started to expand and occupy the surrounding nations all in the 1930s. And it wasn't until, the early 40s where the U.S. got involved, but World War II started before that. I think when we look back, historically speaking, we're going to look at this time and be like, yeah, it had already started at this point. And so the Russian-Ukraine deal, Israel fighting and now the U.S. getting involved against Iran and all this kind of stuff. I think these are all sort of the precursor smaller battles that are leading to a more major world war. I'm not looking forward to that. I don't want that to happen, but I do think that's where we are. And I also note that based on these past wars, at least from an American perspective, Americans don't get into the war or don't support it until something happens, like a Pearl Harbor type event, or like a 9/11 type event that happened back, in 2001, or like even there's a sinking of a ship back in during World War I that got the United States involved, that because Americans were involved and lost their lives. I'm waiting for, and I don't mean to sound like a cynic or, whatever, a bearish person or a Cassandra, those kind of names. I'm concerned that we are going to have an event like that's going to happen that will finally unite Americans and convince us, at least as a nation, that we actually are at war. And I think that is coming before this decade's out, and probably within the next couple of years, 2 or 3 years, if I had to guess.
All right. Yeah. Well, that's not really a positive note to end it on, but I appreciate you sharing. And in general, I think it was a great conversation, some good exploration. So I want to thank you for your insights and your time. And let's stay in touch, and we're going to see how it goes.
Great. Thanks for having me on your show, Bram.
Cheers, man. Thank you.
I hope you enjoyed this episode. If you did, you can click here to find more just like it, and click here to find all Bitcoin for Millennials podcast episodes. Also, if you want to help me shine a light on the message of Bitcoin, please like this video and subscribe to stay connected. I hope to see you for our next episode. Bye.